Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Welcome everyone. Remember, there's a live cast on Wednesday at 1:30 p.m. Eastern Time. I'm going to be discussing how to use the market grid and to set up trades around them, along with taking your questions and going in depth in other markets that I normally don't get a chance to cover. In last night's video, I discussed the possibilities of a very minor retracement, possibly backing up towards the 200-day moving average. Overnight, we saw some weakness in the markets, but by the open, they had completely recovered and opened in a positive mode as the markets pushed forward throughout the session. A lot of the rally that we saw yesterday at the end of the session was based again on a vaccine, something coming out by year end. Market participants are continuing to look to that as an extreme positive that the economy will come back 100%. Throughout the session yesterday, we continue to see strong movements in financials, energy. The airlines continue to move higher as expectations for the economy to continue back is driving the market narrative. Today we're going to have the ADP report. We're going to also see some other metrics come out that are likely to be terrible, but as I talked about last night, most of them are coming in much better than expected. The one sector that continues to lead the way is energy, as we saw crude oil up 3.8%, up about 3% in the energy sector. This is the primary driver behind the market as money's flowing in this area with the expectations that energy demand and the economy is going to continue to come back online full force. There's a number of things that I talked about many weeks ago where we didn't know how people were going to react. Well, it looks like folks are willing to come back out. While the unrest brings in an anxious tone into the markets, market participants again continue to look forward and beyond everything, including any of the negatives that we see coming in reports right now. The ADP report is expected to show about 11.4 million compared to last month at 20 million. So that all of these numbers are starting to improve. Everything's starting to look much better, and the market sentiment just continues to improve. In spite of what you think should be happening, there's very little that's going to deter the stampede of money that's coming into the markets. Let's take a look at the charts and see what is likely to happen as we come into Wednesday's session. Starting with the E-minis and looking at the S&P futures, we're seeing them up again tonight. Probably the most interesting thing that happened is the last 15-20 minutes of trade on Tuesday. We just saw an absolute explosion. There was almost a 20 handle move with about 15 minutes to go. That surge went right through the R2 number right at the end of the session. Market overall was traded in a very narrow range for most of the session, except for that final 20 minutes. That's where a lot of action was. If you figured that one out, you were pretty lucky. As we look at the technical patterns, I talked about yesterday a potential for a minor retracement, and I was talking very minor. We got none of that. In fact, the only retracement we saw was in the overnight market. By the time that the U.S. markets opened, the markets had firmed up and we were off to the races pretty much out of the gate. And so what we're seeing here is it climbing up this channel I've been talking about for a number of weeks. If we look at the models, we got a buy at 2809 on the 15th of May. Now that signal is still valid and moving up in the channel. There doesn't appear to be any possibilities for an exit at this time, and I expect to see the next stop, which I'll look at the weekly charts here in a minute. The next stop for this market is above 3,100, somewhere between 3,114, 3,132. We're going to continue to move within this upward shaped channel that the market grid is mapping out for us, and nothing's likely to change that. Looking at the weekly graph, we got through the R1 number at 3076 yesterday. So far tonight, we've actually pushed up to 3092, so we're continuing. The next stop on the weekly is 3114, And then there's some numbers on the daily chart that suggest that we could go somewhere between 3114 and 3132. So this pattern is going to continue. Even though we see a downtick in ppm1, it's still up at 2%. ppm2 is still slightly negative, and we're seeing this is the blue line or cyan line through here, and that is cutting through the pattern. But we've seen this type of configuration before where the 40-week moving average is climbing, the 10-week moving average is up sharply underneath the market. So that's going to define exactly what's going on. One of the things I've been mentioning, that at the moment there is a very low probability that the market will make any type of major decline. It's less than 10% at the moment, and that's not going to change for a number of weeks. And as we go through this week, it appears that all the algorithms, all the trade is on one side, is on the long side, and this thing is being drawn up above this 3100 level. If we get up toward the top end of this band, that's 3150, 3185. I don't think we can do that this week, but it's very early on. We're midweek as we come in. We'll just have to see how this thing plays out. I suspect the R2 value is going to be where we are targeting for this week, which is 3114. I discussed on Monday's video that I thought we'd see an R1, R2 value. Well, we've went through R1, we've closed above it, and we're likely to continue toward that 3114. There is some resistance around the even number at 3100 to 3102. Most likely that will be minimum resistance. If we get up there, you're going to probably see a stampede of buyers coming in almost in a panic type mode. A market that I haven't covered for a little while is the gold market, and it's really just been flat. There's been nothing to really cover here. We've been trading in a very narrow band, and you see with the market grid on here, we've got a minor downward channel building. We've got a long position here, but it doesn't look good. PPMs are starting to fade on a daily basis. The only chart you can really look at to try to get a feel for what's next in gold is going over and taking a look at the weekly graph, which will give you a little better picture. And I talked about this probably 2 weeks ago now, that we're going to be locked in this sideways pattern here, which is top end of the range is 1826. The downside is 1704. So far this week, it's been 1741, 1774. If we look at the market grid, 1735 is S2, so we've traded in between S1, S2. The resistance on the upside has not been hit, 1780 yet. So I still don't expect much from here. You can see the PPMs are rolling over. You're just seeing a lot of momentum burn off here, and all the excitement that we saw in that really nice sharp rally where you see this buy signal down here is kind of fading at the moment, but this could be setting up a pretty positive mode as long as we remain above the 1719 to 1704 level. We've got some probabilities here, but right now we are penetrating through the 10-week moving average at 1749. We're trading 1746. Just don't expect much from this market at all, except for more of the same. Maybe another couple days of downside and remaining in the range I just discussed. Remember, 1:30 p.m. Eastern Time is the live stream. I look forward to that every week. I get an opportunity to interact with you folks and go into more depth on many issues. Thanks again for watching.